Thursday, 25 June 2026. 3 Asia-Pacific AI stories before your first coffee. Hong Kong is set to receive one of the year's biggest tech listings as Xiaohongshu, the social commerce platform known as Reed, prepares a confidential IPO filing on the HKEX. The company, which reports more than 400 million monthly active users, is targeting a valuation above $70 billion, with Goldman Sachs and CICC working the deal. A previous U.S. listing was shelved, making Hong Kong the default venue and reinforcing the city's role as the primary capital market for Chinese consumer AI companies. Why it matters? The valuation thesis here is not the user count. It is the AI recommendation engine that matches user-generated notes to buying intent. That engine is the core asset investors are pricing, and a successful listing at scale would validate a category of AI-native commerce platforms across the region. Builders in Southeast Asia running similar discovery-to-purchase loops should watch the prospectus disclosures closely for model architecture and engagement metrics that set the benchmark. Capital allocators will also be tracking whether the deal draws enough institutional demand to reopen the Hong Kong tech IPO window more broadly after a quiet stretch. A second-order effect worth watching: if Red prices well, expect Douyin's e-commerce unit and other AI feed companies to accelerate their own Hong Kong listing timelines. So Seoul's Kospi fell roughly 10% and tripped its circuit breaker as AI and memory names led a broad regional rout across Asian exchanges. Samsung, SK Hynix, TSMC, and SoftBank all dropped sharply before dragging U.S. chip stocks lower in the same session, reversing the usual direction of contagion. The trigger was a Broadcom revenue miss, combined with higher-for-longer rate fears, not an Asia-specific shock. Yet the sell pressure originated in Asian hours and set the tape for global semiconductor trading. Why it matters? Asia now accounts for the dominant share of advanced memory production and leading-edge foundry capacity, which means regional price action in Seoul, Taipei, and Tokyo increasingly sets the global chip trade, rather than following it. Capital allocators running semiconductor exposure through U.S.-listed names felt the drawdown before New York even opened, a sequencing shift that complicates hedging assumptions built on the old Wall Street leads Asia follows model. Builders relying on memory supply contracts should watch whether sustained equity weakness pressures Samsung and SK Hynix into adjusting HBM capex timelines. The second-order effect worth watching: if Asian chip valuations stay compressed, sovereign wealth funds and regional strategics may accelerate take-private or strategic stake conversations that were previously priced out. Now, Cerebras cooled its 2026 revenue outlook this week, sending shares lower after a May listing that had opened close to 90% above the offer price. The AI chip designer's guidance fell short of the expectations that rally had set, and its SEC filings continue to show heavy customer concentration linked to UAE buyers, a detail Asian supply chain partners and institutional investors track closely. The softer forecast feeds directly into order book assumptions running through TSMC, SK Hynix, and Samsung, the 3 foundry and memory suppliers that underpin Cerebras wafer-scale production. Why it matters? Cerebras is a small slice of total wafer starts at TSMC, but it is a visible one because wafer-scale chips consume outside silicon area per unit. A lighter 2026 outlook signals that incremental advanced packaging and HBM memory demand from this customer may come in below what some sell-side models had penciled in for SK Hynix and Samsung's high-bandwidth memory lines. Capital allocators pricing the AI hardware supercycle in Asia should note the customer concentration risk as well. When a meaningful share of revenue traces back to a single geography, any shift in U.S. export controls or UAE procurement timing ripples straight into Asian fab utilization. The second-order effect to watch is whether TSMC's gross advanced packaging queue loosens even marginally, which would benefit T4 AI chip clients waiting for capacity. That is your AI in Asia briefing for today. Stay sharp, build well, see you tomorrow.